Mhm. Hello, everyone. Good evening. I don't know if for some of you it's good morning, I have to say, but I think for everyone now it's good evening. How is everyone doing today? Hi, Vasilena. I saw you also on the morning briefing webinar. That's great. So let's give it just one more minute before we start. How is trading going? Any trades for today? Are you in any trading right now in or your watch list? Did you make your watch list Euro USD? Which direction, Vasilena, long or short? Short. Okay, that's nice. Okay, so just to test that everybody look at the silver. Okay, that's awesome. Guys, can you just confirm that you can see the circle, a kind of circle that I just draw on the picture? So, okay, that's great. So let's get started. Now, the topic of today's webinar is about currency correlation. It's a subject that many traders, beginners, intermediate, advanced trader, they are getting trapped in trades where if they knew how to read the correlation between the currencies, they could save themselves from many, allow me to say, struggling trades. There are no trades actually to be struggling as trade. It's the emotional struggle, the emotional trap we get into when we enter a trade. And let's face it, if you get into the trade and after some short period of time it shows you the result, then you say, okay, fair enough, it was a positive result, then you were happy. If it was not positive result, then you question your trade and you see what can you improve for the next trading. However, there are trades that, because it's probable outcomes, they just don't work out, and that's it. It's not something you've done something wrong, right? It's just because it didn't work out. But correlation, it's a big component when it comes to currency. And that's what we want to explain in today's webinar. As you know that this webinar, it doesn't consider any personal advice to anyone. It's only for education purposes. For any person, for any advice, financial advices, please make sure you speak with your financial advisors, okay? Now, as you know, as you most likely know, here at Admirals, we offer thousands of financial instruments. We've been around for more than 20 years, all right? We have multiple licenses from the CISEC, Security Exchange and Commission Services in Cyprus, EFSA from Estonia, the ASICs from Australia, the FCA from England. We try to keep our spreads as low as minimal, so it's on your benefit, guys. And our instruments are available on the MT4 and MT5 platforms. You can access it through the web page, or you can download the platforms on your laptops or on your mobile devices from your App Store or Android stores, okay? As for myself, many of you already know, my name is Theo. I have more than 10 years experience in investing and trading. When it comes to investing, I keep a long-term approach. I'm focusing mostly on the digital currencies and the high-tech stocks. When it comes to the trading, after being a day trader for years and years, now I turn into a more swing trading. It's more suitable for the time I have available for the trading. Okay. So today's topics, we will talk about currency correlations. We will talk about market correlations as well. We will see how this applies to trends, to ranges, which is a different marketing condition. Ranges sometimes when they appear in a good range and a structure, it gives you good trading opportunities. Okay, I usually take trades from the one side of the range to the other side of the range. Okay, so it better works like this, from resistance down to support and from support to go up to resistance. Okay, not just blindly entering trades. When it comes to trend, we all know that follow the trend. You try to get into the bounces and go with a move, or if it's a downtrend, you try to go with the flow to the downside. Now, let's go through to some examples I've put together and I prepare for you guys. So it's going to be very, very understand. And I'm sure at the end of the webinar, you're gonna gain a lot of value. Okay, guys, please feel free to ask me whatever you want to ask down to the chat, so I can answer your questions. Okay, I would like to keep it in a bit more open today. So I would like to receive some questions during the webinar, something I don't used to do it, but for you guys today, I've decided I'm going to give you your questions. Just ask whatever you want to ask, okay? And I will try to make sure that I'm going to answer every question as soon as possible. Now, just to make sure you're going to keep following us on social media, okay? Please, I'm sending you now on the chat group. I'm sending you the YouTube channel, the Telegram, the Instagram. Guys, please make sure whatever you use, just follow us on that platform, so you never miss any updates, any webinars. For those you don't know, I'm hosting on Monday, on Wednesday, and on Friday morning sessions for 30 minutes. And I'm going through the live updates on the market, possible trading opportunities. And it's very important, guys, to stick around and make sure you subscribe the YouTube channel and you get the webinars there. Okay. Now, correlation. When we say currency correlation, in many people's mind, it comes this one. Let's say gold, like this, gold. And we tend to say that gold is correlated with the US dollar. Correct, of course. But why is correlated with the US dollar? Can anyone type, if you know why gold is correlated with the US dollar? Give me an answer. Just whatever you think. There is no right and wrong here. It's an education webinar, but I would like to see you participate as well. So, does anyone know? Yes, Basilena, they have it. That's right. Exactly, Malden. Because gold price is in US dollar. So, whenever the US dollar is rising in price, we do expect that when we have the US dollar rise, we expect the gold to go down, to fall down. Correct, supply and demand, basic. However, if we go to the gold chart, the following pattern of the gold, Nowadays, it changed a little bit and it doesn't follow through 100% correlation with the US dollar. If you see this uptrend here from April to middle of May, this is the US dollar index, guys. Okay, can you see it here? That's the US dollar index. We are on the daily chart. What does it mean? It means that each bar here, it has a length of a day. Okay, it's not an intraday example, it's a daily chart. So let's get rid of this. If you go to the gold chart, most likely we will not experience 100% downtrend with this sequence here. Why? Because there are other components now. They affect prices of this type of metals, materials, and so on. But how can we use the currency correlation in our favor so we can enter a very high probability trade? You can watch this. You can watch this example. I marked here with a black arrow this bullish candle which it formed around on this support zone and on the 50 moving average on the daily chart of the US dollar index. The exact same day, the Euro US dollar by the end of the session printed a very nice strong bearish engulfing from this resistance area. Can you see it? The exact same day, if we go to the Australian, sorry, let me just move this around. If we go to the Australian dollar, US dollar, we see something a bit different. We see that this is an uptrend and we see a bullish inside candle here. So if this day, this bullish inside candle, I'm going to stay a little bit on the gold, on the Australian dollar. This inside candle, it came right on the support zone along with this pin bar here, right on the moving average, which the moving averages, as we know, acts as dynamic support and resistance zones. Dynamic because they are changing with the price. They are not static like the horizontals. So if we go down to the lower time frames, we can see a clear double bottom here, which is a reversal pattern, bullish reversal pattern. So someone can say that I see this bullish pattern here. We don't know if we don't have any information about the rest, okay? And someone can say, where is the black arrow? Oh, I'm going to buy the Australian dollar against the US dollar. And of course, I can go to the intraday charts, 4 hours, 1 hour, and trying to find buying opportunities. If you pay attention to what the rest of the currencies they are doing against the US dollar, you can see that this pair is moving up, not because the Australian, not because the US dollar is weak. It's moving up because the Australian dollar, it's super strong. So if the Australian dollar is so strong, but from here we can see that also the US dollar is strong. And we can see against the euro, the US dollar, it's even stronger because it obligated the euro to put a bearish engulfing. Bearish engulfing candles, for those you don't know, because I use it all the time, the engulfings. I'll just draw you to explain you a little bit about bearish engulfing candle here. Bearish engulfing candle, it's the formation which when the market opens, it takes the last high of the previous bar, it makes a higher high, so it triggers all the orders above this high, so all the orders here, and then the session, which it's a daily session here, it ends up closing even below the low of the last session, the last days. This shows a massive shift in the momentum in the market, and it's one of the strongest bearish candlestick pattern you can find in trading. Okay, that's one of my favorite trading setups, and I trade these setups a lot. You will see it also on during the live trading sessions. So instead of go here on the Australian dollar chart and buy the Australian dollar against the US dollar, you can increase your probabilities. You can put the probabilities in your favor by understanding that this market is not moving up because US dollar is weak. It's because Australian dollar is very strong. But from here, we can see that US dollar is also strong and US dollar is very strong. So if you go to the gold chart, you can see that the same day, the gold was trying and moving sideways. Okay, so a sideways move on support, it's something we don't take in consideration to trade because the price is just drifting around. Now, our focus on that day should be here, knowing correlations, it should be here on this bearish engulfing pattern, along with the confirmation of the US dollar index. There you go, you have a very high probability to experience a good trade. Okay, let's move forward. We make a lower low, we broke through this trend line here. Now let's focus on the red arrow. What do we have here? We see that the US dollar index, it makes higher high, and this session finishes with a bullish pin bar, rejected both EMAs, closed bullish, and left behind a tiny line at the top, which it's a very bullish setup, very bullish signal. But what happens in the Euro USD that same day? The Euro USD finishes with the bearish pin bar. That's a confirmation that yes, US dollar so far is strong, Euro is weak, we have similar behavior. So let's go to check something else. Let's go to check the Australian dollar. The Australian dollar is pushing lower, and here we have equal highs, but we have a very strong bearish close. So we see that Australian dollar against the US dollar is weak. Euro against the US dollar is weak. We have this set up here on gold, which put a pin bar, but it's a kind of tricky setup, this one here. And guys, I will make another webinar to go through exclusively to candlesticks, okay? Because there are many variations and I don't want to spend time today and explain all the possible candlesticks because we want to just stay on this slide, okay? So we see it put a bearish candle after this pin bar with a bearish close. So what does this tell us? We have a confirmation from US dollar index side that the market is showing relative strength across the border from US dollar side. Do you guys understand that? We see that US dollar is pushing higher, and it creates all the markets we have here on the slide to push lower. Collectively, US dollar is the strongest. That's what we can see from this chart. So we go one step further. Okay, we know that we want to buy US dollar. So we need to find a pair which has the US dollar, and we want to just, if it's going to be the Euro USD, we want to just sell it. If it's going to be the Aussie USD, the same. If it's going to be gold, the same. But how can we find a best setup across these three? Because we're not going to go and take three pairs and just open the same position to all of them. Okay, we can say here that Euro USD has a lower low, so it's in a clear downtrend. So Euro maybe it's the weakest out of everything. Relatively small range of price, which it's going to help us to have a stop here, an entry here. So we have room to make 2-1 and 3-1 in profit if it's going to end up be a winning trade. If we're going to take the Australian dollar against the US dollar, again, entry here, stop here, and then we can make, we have this small obstacle along the way. So it wasn't a clear trade for me to take this one because of this obstacle. If we come on gold, we have this support here that was out of the equation for me. Okay, so the clearest and high probability trade at that stage, it was this one. And how do I find it out? Because we know how to read the correlation. From today, we know how to read the correlation, the currency correlation. Let's go to the next example. We see the market put the higher high up, a new high here, is pulling back, and we see this bullish engulfing pattern here, which is a very strong buying indication. What can we see on the Euro USD? We see a bearish engulfing, not that strong, because the close, it didn't close below this low point here. Apparently on Australian dollar against the US dollar, we can see another bearish engulfing here. Okay, again, it didn't close very strong, but what can we see on the gold chart? On the gold chart, we see a nice lower low, and we see this bearish pin bar rejecting both EMAs and retesting this support. Now, let me just show it better for you. And retesting this resistance zone, which previously acted as support, now acted as resistance. So maybe this one is the best opportunity for today. Do you guys see, as I walk you through these examples, how you can understand the correlation between the pairs? Please let me know on the chat below if that's clear for you. Yes, that's great. Guys, I do promise you, if you're gonna slowly implement this new methodology, this new way of thinking into your trading, it's gonna give you high probability setups again, doesn't mean that you're going to win all the time. No, that's not the discussion, and that's not what's happening in trading. It just gives you high probability setups, which they can make your trading much more smoother, to go easier with your trading. Okay. So, do you guys have any question in this example, or I will go to the next slide? Do you see how sometimes it's better to, for example, in the same way of the strength of the US dollar, at some point it was better set up to trade it against the euro. At some points it was better set up to trade it against the Australian dollar. At some point it was better set up to take it against the gold, to trade the gold, not against the gold, just to trade the gold. Okay. So I keep the example with the euro. I'm sure you still remember we just talked about this bearish engulfing. We just talked about this bearish pin bar just a while ago. Now, in continuation of that, I would like to talk about the euro strength or weakness in the same days, on the same days, because maybe the euro was going down because it was so weak across any other currency, across the board. Okay, so it's good to filter the information we have in front of us. Okay, now we have the euro with a bearish engulfing candle. At the same day, we see that the euro against the Australian dollar, it's not a bearish engulfing because it didn't take the low, it didn't close lower, but it's a nice inside candle with a false break of this zone intraday resistance, and it closes a bearish pin bar. So what does this tell us? It's telling us that the euro, it's also weak against the Australian dollar. So we have euro weakness, Australian dollar strength. Let's see what happens at that day with the euro and the Canadian dollar. We have the euro putting a lower low. 1, 2, 3 candles, it's pushing higher. And then surprisingly, it's putting a nice bearish engulfing strong closing candle here. So the euro, it's also weak. Canadian dollar, from this chart, it looks strong. We don't know if Canadian dollar is the strongest, okay, but because we are focusing on the euro now. If we check the euro British pound, we see that the euro is doing a higher high, so it doesn't keep a downtrend structure. That's really important. I will explain it in a second. It's printing out the bearish engulfing here, but the overall market structure, it's in an uptrend. Regardless if it's a minor uptrend, or some of you can see this as a triangle formation, which you can use it for breakout and so forth. Okay, it's not the focus right now here. The focus is to see the overall structure, what the market is telling us. And the market now is telling us here that I put a higher high, so my buyers are in control, not your sellers. Okay, but we can see from the Australian dollar chart that the euro printed a lower low. We can see from the euro Canadian dollar chart that the euro printed a lower low. So why to go and just blindly execute a sell order on the euro pound. This tells me that the pound also is weak because the euro is making higher highs. If you are making higher high, it means the other part of the equation, the other side, the other currency, is showing weakness, right? But from all these charts, we can see that euro is weak, euro is weak, euro is weak, euro is weak. But here euro shows some strength. So is it the right pair to trade on the downside? The answer is definitely no. Some of you will tell me, okay, Theo, but we see that the bearish engulfing on this level, if the overall trend is down, the weekly chart is down, and I totally agree with you. But that's not only that's not only the matter here. The matter is to see where currently we are in the overall structure, and if we have a convergence between the currencies. Sorry, Vasilena, you said it's like a white noise. Sorry. What are you referring to? If just clarify, maybe the drawings are confusing you here, or you are talking about the euro British pound. So the euro British pound, no, it looks like a white noise. Yeah, that's true. That's true. So from this example here, you can understand that either we want to take the euro on the sell against the US dollar, which we saw that the US dollar was very strong, either against the Australian dollar, because guys, if you remember from this chart, here, you see the Australian dollar, how strong was against the US dollar. Can you see that? So if you go to the euro chart against the Australian dollar, you can see that the Australian dollar, so here is the Australian dollar, you can see that the Australian dollar is behaving with a strength in the market because it's pushing euro lower. It was pushing US dollar lower, and it's pushing euro lower as well. So it's telling us that Australian dollar has strength in the market. All right. So we could have taken this to the downside. We could have taken this also to the downside, but I wasn't convinced at that stage to take this to the downside. To be honest, to me at that day, it was, I think, this setup that was my trade I participated into. Okay, that's what I remember at least. Now, let's check. Let's check. Guys, do you have any questions in regards to this? No questions? Okay. Let's have a look to the second candle. We see as again, let me take you back. You see we have this bearish pin bar on the euro. You can see it here. So it's the same chart. The euro is printing bearish pin bar against the US dollar, so it shows weakness. Let's go to see how the euro is behaving against the other currencies. And that's where, I promise you guys, that's where you're going to have a big an aha moment. Okay. You go to the euro Australian dollar and you see a bullish pin bar. The market after this low is trying to make a lower low, but the buyers, they don't leave the market to make a lower low. And from here, it's just bouncing at this support, and it's put a bullish engulfing and close here. It's the same day. This red arrow here, it represents the same day with this red arrow, with this red arrow, and with this red arrow. So I've decided that I want to take this trade, this pin bar, as a valid trade. Why I took it. I'm now just make sure you get it right. I'm not analyzing the trade I took. Okay, I'm just it just happened to be in the example, and I'm just mention what I saw, and I validate this as a good trade setup. Okay. So the euro put a bullish engulfing against the Australian dollar. So the euro showed a bit of strength here. The euro put a bullish engulfing against the Canadian dollar, and it shows similar scenario, a bit of strength. And the euro put a bearish pin bar against the British pound, and it shows weakness. So we have some strength and some weakness in the market, and we are a kind of 50-50 what we want to do. If you go to the US dollar, though, I'm going one slide backwards, you can see that this bullish pin bar on the US dollar index, this bearish pin bar on the euro, this bearish engulfing on the Australian dollar, and this bearish close candle on the gold, they indicate a strong strength on the US dollar. Now, which one will be the best component to trade the US dollar against? That's where I flip to the next slide, and I try to understand which other currencies may have behaved as weak in the market. And when I saw that Australian dollar and the Canadian dollar, which both they are commodity currencies, they behaved with a similar way against the euro, their overall trend is downtrend, which it means the euro is down, the euro is down. So we are in a correction on these markets. It didn't take my confidence away from trading the euro USD to the downside, because the USD was so strong, and at that stage, that was the best signal in the chart to trade. Okay, but I know some people, they took these counter trend trades on the lower time frames, on the 1 hour and 15-minute chart. When you see this bullish engulfing pattern here, when you see this bullish engulfing pattern, you can assume that if there is the right market structure and there is room for movement, then the next day or the next session, the market can put a continuation bullish candle, which can give you some room to make a good trades out of that on the lower time frame. Because realistically, if you're going to go to this higher time frame and take a counter trend trade, it's not only very low probability, but guys, where are you going to put your stop? Where you make your trade invalid? When we are in a trend, we know that our trade is invalid around the last swing high. When we are in the middle of nowhere, our trade is invalid anywhere in this area. And the same with here, our trend is invalid. It has to be invalidated here down to the lower point. So you cannot put stops here, 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 here. Everything is invalid. However, how much room you have to make at least 1-to-1 or 2-to-1 reward risk ratio? You don't have too much room. So it's better. That's why we say better to trade with a trend, because of the high probability trades it can give us. Let's go to the next example. This one is the charts I put together for USD Japanese yen, pound yen, and euro JPY. Let's review this chart example. We see that we are coming from a long uptrend. The market normally is pulling back, and we have this bullish candle here, which it closed higher than the last high. So buyers, it indicates that buyers are in control, back in control. What do we see about this market structure here? There are a few things to discuss about this one, this example. We see that the market, the pound pushed higher again. When it starts the correction phase in the pound, you see the market left this massive tail. This is the first signal of warning. If you have to compare this last bullish candle with this last bullish candle, what can you say about the buying pressure? Can we say that buyers were more in control here because they kept the prices at least above the half of the total range of this candle, where here the buyers, they got stopped by the sellers and the price went all the way down almost to 1/3 of the total length of the candle. So it shows us that we have a kind of exhaustion from the buyer side. What can we say about this bullish candle? We can see that it made a higher high, but it didn't manage to close higher than the last high. So this buying pressure here is not as strong as this buying pressure here because of this small detail. Can you guys see it? I hope I'm not the only person who can see this. Yeah. I'm joking, of course. So what's happening with the Euro JPY? The Euro JPY, in terms of behavior, it's even weaker, because after this push higher, we see a lot of rejections here, the tails, a lot of rejections, and this bullish candle, it's just an inside candle of the previous candle. So the buyers are not in control anywhere here. So which will be, if I understand that Japanese yen on April, beginning of April, it was weak across the board. So, and if I wanted to trade the Japanese yen on the downside, it means I have to buy another currency. So based on this chart, don't you think that the best buying opportunity was the US dollar against the Japanese yen because of what we just explained, right? Now, there is another thing you can take in consideration when you review this market. If you just see the big picture, as I like to call it, you can see that this impulse move came right after this consolidation, which this consolidation has a characteristic of the price was just bouncing on a support, and it wasn't creating lower lows like the JPY, neither like the Euro JPY. Here you can see that the market was creating lower lows all the time. You see, lower low, lower low, lower low, sellers in control, sellers in control, sellers in control. Here, the same, lower low, lower low, lower low, sellers in control, sellers in control, and then it breaks above, where we can see that on the USD against the Japanese yen, sellers were in control. Wherever the sellers, they trying to come to the support, the buyers, they step in and they buy. The buyers, they step in and they buy. The buyers, they step in and they buy. Do you see this behavior? This is a behavior of a strong buying momentum. Okay. Did you guys understand what we show so far? Did you guys understand how to start reading and implement the currency correlation when you are in between some trading decisions and you don't know which one could be the best pair to trade at that moment? If you're gonna make a step back and you just watch how the currencies are behaving between them, it will be very simple for you to make a trading decision that it's going to increase your probabilities. Okay. In a way, I'm a bit of a bar person. That's perfect. You can do the correlation, Vasilena, with the bars. It's good that you mentioned that you are a bar person. If you want, we can talk in other webinars about the bar chart. The only difference with the bar chart is just the visualization of the open and the close, if it's a bullish bar, or the open and the close if it's a bearish bar. Okay, but the inside formation, the pin bars, the engulfings, it's exactly identical, the same price pattern behaviors, whether you're using a candlestick, whether you're using the bar chart, doesn't change. And I will tell you something. I start my trading journey, trading for many years, bar charts. I was applying these patterns to the bar charts because they were very powerful patterns. They show you the shift in the momentum in the market. Okay. Do you guys have any questions? Do you want to ask me something? Please ask whatever you want to ask. Please let me know. Did you find a good value out of this webinar today? A nice feedback from you will be appreciated a lot. Okay, I don't see many questions. I don't see many questions here. Yes, pretty much. A question about silver. Yes, Vasilena. Vasilena has a question about silver. Let's hear what the question is. With which currency is correlated? That's a great question, actually, and maybe it's a question that other people they have. Silver, it's also quoted on US dollar, so it's highly correlated as well with the US dollars in terms of pricing. However, in terms of chart viewing, it doesn't follow through that much. Okay, it's stuck in that range between 18 to 27, let's say, the high and the low of the last few years, and it's just hovering around there. Okay, so but basically it's quoted on the US dollar as well. Okay, guys, thank you so much for your participation. I hope you gain a lot of value from this webinar as well. Please remember to subscribe, especially on Telegram and on YouTube channel, because you're gonna receive notifications when I go live every Monday, Wednesday, and Friday at 9:30. If you have availability and you can jump on the webinars for just 30 minutes, that will be awesome. Okay, I wish you to have a lovely evening ahead. Happy trading days for tomorrow, and I will talk to you soon. Thank you so much.